U.S. economic data and the Fed rate decision. As I mentioned off the top of the show, the Fed will announce, I guess, their interest rate policy third week, roughly 2.5 weeks, 3 weeks into September. And a lot of people are expecting a 1/4 point cut. There was some talk that we may see as much as a 50 basis point cut. When we went through beginning of August, many people were fearful and they thought maybe the Fed should cut even before the next meeting, kind of have an emergency cut. Well, I think those fears are taken off the table. And I also believe that a 50 basis point cut has been taken off the table. And I think the Federal Reserve will cut 25 basis points, and they may cut 25 this meeting, 25 the next meeting, and 25 basis points once again in the last meeting of the year. But it is my opinion that, and it's been my opinion, as I'm sure most of you will recall, that we could see a couple of rate cuts before the end of the year. Perhaps we could see as many as 3, but I'm going to hold out and say, let's go with 2. And if we do get a third, well, we'll deal with it at that time. And I guess the main reason for a cut is because we're seeing inflation coming down. First chart that we have clearly shows this. The Consumer Price Index, CPI reading. We got a reading of 2.9% for the first time. We can show that U.S. Consumer Price Index now. There it is. It is the first time that we've seen a 2 in front of the headline number. When you strip out volatility, energy and groceries, so the more, I guess, the number that the Fed looks at more, right, which is the core number, that's still above 3.2%, but that was higher as well. That was 3.3%. It's dropped down to 3.2%. So we're seeing Consumer Price Index falling. Next chart that we have will show you the PPI, which is the Producer Price Index, which these are your wholesale prices. And I think the most important thing here to see is final demand services starting to come down, 2.6%. You see, in the United States, inflation has been very sticky, as we know, and that's been mostly in the services sector. So now we're finally seeing the services sector start to fall. We're seeing final demand of goods, and we're seeing final demand in general, 2.2% on PPI, a great number, getting close to that all-important 2% number. And finally, we have a chart on PCE, which is your personal consumptions and expenditures. Here we are there, and we can see it down 2.5%. So we are getting close to the Fed's number of 2%. I think it's just a matter of time before we get there. And I think the Fed now can look back and say, you know what? Yes, we're getting close to our number. We're on our way to seeing or meeting target of 2%. We don't need to have interest rates well above 5% at this point in time. Double where the inflation rate is when you look at PCE. And keep in mind, yes, we are seeing some strength. GDP is strong. We're seeing retail sales. The last number was strong, but we're still seeing issues, slowing jobs market. Job openings are coming down. Hires are coming down. Jobs growth, right? Only 114,000 jobs created in the United States. That is coming down. So we are seeing slight weakness to help bring down the inflation, but still seeing strength in certain areas so that we get that soft landing, that landing of the markets, the way the Fed wants, the way all of us want, where we can see inflation coming down, but yet still not have the U.S. economy or the Canadian economy, for that matter, fall into recession. And so with these numbers falling and showing us a significant reduction in inflation, I think you could see the Federal Reserve cut in the next meeting by 25 basis points.